Alright, so this is how you would have made money today on May 8th. As you can see right here, if you haven't added the 15-minute order block indicator, you just search up ORB and the indicators and put these settings in. Yeah. So what you would have done is look at the chart. Way after 10, or not 10, 9:45. What do we see? Break, a retest. This is also right here, supply zone on the 5-minute chart. This entire thing would have been a supply zone, and then you would have been. All right, let me switch these low key. Hold on. Let me put these on the 5-minute chart and then 1-minute chart. Okay, we see the break. We see the retest of the supply right here for all those people to get their orders in, and then what do we see next? A fat dump. It's a big dump right there. Let me take this off. And then another thing we could have used would have been the alligator. This indicator, this one I always use. You could see that we're still sort of trending down, and then the perfect opportunity for you to get in would have been right here, because we already got the break, we got the retest. It's under the red alligator line, and boom. And if you use Bollinger Bands, the perfect exit would have been right here or right here, or if you want to use the alligator exit that I use, it would have been right here. Either way, you would have made money. That's printing, especially with 0 DTs. And then right here, it goes above red, and then it goes up here. You could have got out because guess what? This right here is a psychological level at 565, and we have the supply zone right here. Perfect exits. But if you only want to use the 15-minute ORB, you want to come down, and you don't want to use any indicators, I got you. So what do we see? Right here we see that we also did come back up. So we got this retracement, went down, retracement, went down. So that's what, creating like a little W. Boom, boom. And then if you wanted to really wait, you could have waited for the breakup structure, the retracement, and then it popped all the way from 565 all the way up to 569. That was crazy. $4 just in that move. You would have made money printing bag. And for instance, this actually does work. Yesterday was a little crazy though. Yesterday, you see the movement, it was kind of terrible. But low key, I gotta be back. Yeah, my fault. I had to take a McDonald's break low key. But basically, it was crazy. Just because we did break out, but then we did have the retracements, we just didn't have the continuation. It was so choppy yesterday. So what you want to do one day is, like, when it's choppy, you just want to look at the demand zones, the supply zones. That's when they come into play. See here. You can see here we did reject this. We filled in the supply zone, especially when there's big moves like this. People are like, "Oh, the fair value gap, fair value." No, it's just there's so much sell orders here that didn't get filled in, so they're gonna fill it in, and then I guess fair value gaps. But I don't really trade fair value gaps. I don't believe in them. I believe in supply and demand zones. But they moved them up, then they pushed it all the way down, as you can see here. And was it perfect? Obviously not. But it still made it down. Was that $4? And then as you can see here, you would have just obviously you have to go to higher time frame to see the rest of the where we could target. And a lot of people forget that they see money and they're like, oh, like let me go back. It's not about how much money you're making. Some people that trade top step like futures are like, oh, I want to aim for $300. No, you gotta look at the zone, sweetheart. And then right here, as you can see, and like I said in the other video, you can use Nasdaq zones, and basically Nasdaq bounced from a zone right here, or it was outside of the Bollinger Bands or something like that, and then I took it. But the 15-minute ORB is really good. Some people, or sometimes I like to use a 30-minute. Because it's a little cleaner, in my opinion. It's like, yes, it's a little more, you gotta wait 30 minutes, but come on now. Because if you move the 30 minutes, you can see 10 a.m. You can see it's much more cleaner. You can see that we actually did reject it here twice, and then we bounced, below. So if you wanted to use 30 minutes, that's actually perfect as well. You can see here we broke out, boom, boom. But that's how you would have made money. Today I was just showing y'all examples. On the 30-minute ORB, you can see it's a lot more cleanish. We get that break of structure. Unless you use momentum, you would have caught this trade. And then obviously we came back up into the supply zone, folded in those orders, and then pushed it right back a little further than here. Obviously, liquidity sweep. And then you can also see right here that we did get that break of structure right here, that retracement into a demand zone, and then we pushed it higher. So all this just comes from market experience. You can just see things. So just show up every day. Even if it's not 9:30, just show up at least some point of the day and review your stuff. So yeah, that's how you would have made money today. Momentum here. It's a lot of trades, but 30-minute ORB just gives you a set levels or range. You know what I'm saying? So it's really good to use. So remember, just check out the video that I posted with the ORB, or I think I showed you in the beginning of the video. My bad, I low-key forgot because I had to go eat.